And it's now time for the big three. 3 stocks, 3 charts, and 3 trades. Rick Ducat will take us through the charts, and here to take us through the trades is Tim Bohen of StocksToTrade.com. So great to be with you both, of course. And Tim, let's start with you. Really want to get your thoughts here on the week that was and just, your overall thoughts on the markets as they stand right now.
Well, first off, I hope the cap isn't too bright, but my office is on 120 acres of hunting land. It's the middle of hunting season, so you got to stay sharp out there. And plus, I'm headed to the tree stand as soon as we get done with this. So stay safe out there, my friends, especially when the guns are firing. So that being said, market-wise, I look at, obviously the market moves with NVIDIA. And got the announcement we expected out of NVIDIA. I had a big feeling that they would crush earnings. But, we had that big gap up and then sell off in the markets and everything else pretty much following that, the 800-pound gorilla. Now, when people ask about how to react to that, I just, I work with literally thousands of retail traders. And one thing that I struggle with every day is there are so many retail traders that are just using way too much margin out there. And I think that move on NVIDIA and a lot of these stocks, people saw that gap up. They panic bought in with margin. I mean, we're seeing that with Bitcoin. I mean, all these forced liquidations. I mean, people need to learn how to trade before they use margin. People bought that big gap up on NVIDIA. When it didn't continue the next day, they panic sold, panic buy, panic sell. It's the worst way to trade, but it's the reality of what we have right now. So I continue to stay very bullish. AI names, Mag 7, particularly AI. But I mean, in the short term, you're going to have these very volatile days. But if you do it the right way and you trade technical analysis like I use and like Rick uses, there's opportunities there. A lot of these stocks pull right back to key levels and bounce off them. They butt into resistance levels and pull back. So if you know the technicals, like Rick breaks down, there's tons of opportunity out there. Now, if you're a long-term holder, it can get pretty scary day to day for sure.
I mean, so I think that speaks perfectly to our first name here today, which is Rigetti Computing, which has still been able to hold on to a 30% run this year, but has now contracted almost 50% so far this month. So speaking exactly to the conditions that you just outlined, which is you do see some of these volatile periods. So how do you think through a name like this when, of course, you have been on a pretty nice run? There's a lot of enthusiasm tied to Rigetti, but we've pulled back substantially now on a month-to-date basis.
Yeah, and so this was one of those ideas that I shared a couple, going back, it was on Trading 360 when it basically broke that 20 level. I mean, you can see it on that chart right there. Broke out. I was like, hey, I love this as a quantum computing play. Went from 20 to almost 60. So it was a great run. But a lot of people to this day, they're asking me about it. Like, hey, do I buy now? And when it was in the 40s and 50s, I was like, hey, you missed it. But I think, great chart, I love that. We pulled right back to that area from earlier in the year. Now, the key is going to be, if it can hold that level, I think there's a very good, I don't think it'll go all the way back to 60, but I think this creates a great trading opportunity as long as it can hold that previous breakout level from the spring, which I think, with resistance, tends to become support. And as of today at 11:19 a.m., those low 20s are support.
Okay, and a good trading opportunity. Perhaps if you're not using too much margin, I could not second and third that enough. But now as we do look at the charts here, Rick, walk us through the momentous run up and then unfortunately the pretty substantial pullback we've seen here.
The market giveth and the market taketh away. It's a common situation here, perhaps not to this extreme here, but big swings can happen. You got to be prepared for them. The $20 level is what stood out to me first of all as well, because that was around where we saw our best close earlier in this yearly period of our chart. We had a significant gap down then. From there, though, this light green line here, that's what really stood out to me, because we had a situation where we topped out around that point twice at that 14 level, then one more time, then we bottomed out there 2 more times. So the old resistance became supportive, as speaking to what Tim was describing there. So now we're approaching a similar point once again, that 20 level. Will the old resistance become supportive in this case here? That would be a key level to watch out for. That's also kind of where we had our our extreme breakout point when this huge run up began. So to look the other way, though, some of the significant upside horizontal levels that stand out, right here around 28, 29 or so, we had a series of lows. That's also about where we had our most recent gap down. And then 34, high points, low points, and then breakdown point, and we failed to retake it then. So those would be some other areas that traders may have their eye on. When we look at our moving averages, we can see that we have our 21-day and 63-day exponential moving averages here in yellow and orange respectively that are very closely aligning with our downward sloping trend line in blue beginning at those highs. So that level 3060 or so, 3050, that could be a breakout point here if we do start to see a rise in our prices here, then the next stop could be 34. We can see that RSI is also kind of modestly improving here. We broke through our downward sloping trend line, but we haven't really made any gains from this point here. We are staying above that oversold area. Perhaps improving is not really the best word. Maybe not worsening as much as you might fear, I guess, from this. So if we were to dip below that 30 level, that would be another bearish development. Finally, if we were to look at our volume profile study, the significant volume area is all the way down here near $12 or so. Things really start to pick up once you get around that 14 level like we mentioned. But 20, that also stands out here. Relatively speaking, that's where we start seeing volume stand out there. It also lines up with our -1 standard deviation channel and our purple 252-day exponential moving average, our long-term moving average. So that stands out as a supportive area to the downside.
Okay, and now let's shift gears into Walmart. Now, Walmart has seen a pretty nice uptrend on the year, and I mean, expecting to close out this week up over 3%, which does feel like a win as far as these retail earnings moves have been concerned. So, Tim, really walk us through your thinking over the long-term moving averages we're seeing, and I mean the overall long-term, pretty sustained uptrend we've seen in Walmart now.
Yeah, so Walmart is, most weeks I like to bring kind of, I'm here every week. So most times I like to bring, more speculative ideas that can kind of be, big spikers before I come back on the following Friday. But I know there's a lot of fear out there. And listen, people still want to be in the markets and, might be shying away from a Rigetti, obviously. And there's nothing wrong with that. But, this is Walmart. I was on with Nicole a couple months ago. We kind of broke this one down. It was at about 100. It's up. It's up a little bit. It's been grinding along, but I do really like the chart, and it's kind of my favorite. As I mentioned in the opening statement, I'm still very bullish overall. But hey, I could be wrong. I don't have a crystal ball. The market's always right. The opinions aren't always right. So I just like this as that number one kind of flight to safety. And they're also kind of an AI play. They're doing a lot there. So, if you're looking for that kind of safer play and you want to avoid some of the more speculative names that I bring, Walmart is definitely up there as my favorite, especially if I'm wrong and things get shakier in the markets and the economy.
Yeah, and I think that was definitely felt by the market in reaction to their earnings. We saw a pretty nice lift and a lot of positive commentary. I mean, especially even from their CEO, where we're seeing just further strength ahead. And I could not agree more. More of this omni-channel presence they're really, really honing in on. So now let's look at the chart here, Rick. Hasn't been a straight shot to the upside. We've had some areas of pullback, but it feels a little bit like an EKG to the upside, if you will.
Yes, I see kind of zigzagging back and forth here.
Yes.
Mostly our price action is contained between our two white trend lines here. You started by drawing one off of our low point here, connecting subsequent lows more or less. You're really looking for just the general trajectory here. If you were to duplicate it, though, it matches up fairly well with many of the highs we experienced here. So that's one tactic you can include in your technical outlook here to give a potential idea of where to look for resistance. And indeed, that is about where we topped out today so far and yesterday, right around that 108 level here. But to revisit the concept we talked about with our last chart, the level right here near about 100, just around that 100 level, a high point multiple times here. Then it became a low point after we had our breakout. We did collapse below it eventually, but then it was lows many more times here. So this was once again that idea of old resistance becoming new support, one of these key kind of pivot levels that you see in a stock here. If we did not have this earnings event, I would have said that this looks like quite an interesting head and shoulders type setup here if you're interested in that kind of pattern activity with our neckline down here at that 100 level here. But as earnings can be such a major potential catalyst, it kind of throws that into the wind. You can see that this bearish pattern did not play out at all. We broke through our trend line to the upside and are still hanging on to a large degree of those gains. So now, when we look at our moving averages, we have our two moving averages, 21 and 63-day EMAs, again, near 102 and 103 or so. So that gives us a confluence point to watch to the downside. We can see that RSI has also had a matching breakout with price. We are in the bullish territory once again above the 50 midline here, so some improvement by that measure as well. When we do look at volume profile, our biggest node that's anywhere close to current prices lines up with the moving average confluence that I just was mentioning here. You can see right around 103 again. That also happens to be our teal line there, our linear regression line, our line of best fit. That stands out as a supportive area to the downside. The upside point, 109, 110, those old highs that we saw, that's the mark to beat.
Okay, and last but not least here, we're diving into IBM, which has become a really interesting player in all things AI. Frankly, I would have never guessed this name would be as interesting this year as it has been, but we also have pulled back about 9% from those highs, so pretty substantial repricing we've seen, with the overall tech weakness. So Tim, how do you think through some of the recent pressure? Do you see this as an opportunity?
So, IBM is kind of, I don't want to call it like a sympathy idea to Google. Back on Halloween, was on Trading 360, shared Google, really loved it for, both AI and quantum. I know quantum kind of gets a lot of love and then seems to get a lot of hate. I'm a big believer in it, and IBM's a leader in that. So was very happy with that call back on Halloween, even though Rick and Marley was here that day. I did forget my Halloween costume, but was happy with the Google buy. Still pushing today. Warren Buffett bought in a few weeks later. But IBM is one of those names that, they're huge in all this infrastructure and really the research and development of quantum. And I just think it's like, as a child of the 70s and 80s, it was everyone talked about IBM. But I just kind of look at it as a forgotten name. And I think there's a good trade here because I think, now, again, can't predict the future, but I think as we head into next year, they're going to be making a lot of announcements, kind of like Google did with their Willow quantum computer, et cetera. So, and then also, just a strong chart that's kind of held up in the chaos over the last couple weeks.
Okay, yeah, and I like that you compare it to of course Alphabet, which not to say it's the more maybe boring, the old timer version of it. I think that they've done a great job with some of these earnings events where they've been able to really refresh some of that narrative around what I would have said was a stale tech company, but this year have been proven completely wrong. So now as we do look at the technicals, again, Rick, we've seen a pretty substantial pullback, but again, the recent, uptrend in this year's gains are still very much intact.
Yeah, kind of the sleeper hit of the tech sector, as you guys said here. Strong performance. We did have this area 288 to 295. That's where we found a little bit of a range previously in our chart. Once again, you can see that the support became resistance going forward. Shortly after that point, we had our breakdown here. Then the 265 level came into prominence. Now, though, we have broken above that level here. We topped out near 315. That was about where we had our best close, despite intraday highs going beyond that point. But now we are retaking 295 after bouncing off 288. So our old range came back into prominence once again as a notable supportive area. So we can see, though, RSI is still not really making a convincing breakout just yet. We are still below that 50 midline here, just a hair, though. So if price continues to show some strength and RSI also gets a matching breakout, that would be an interesting development for the bulls. So finally, when we look at volume profile, we can see we have our volume node right here, our supportive area coming in right around 285. So that's a particularly heavy trading area. Our moving averages come in pretty close to that point as well. Volume picks up again when you get here near the 305 level or so.
Yeah, and I think that three really interesting names to look at, especially as we recap this week. So appreciate it to Rick Ducat as well as Tim Bohen, stockstotrade.com. And also, I do appreciate the orange hat. Stay safe out there. I'm envious that you are near nature as we are in Chicago, not very far from nature here.